spider web is tangled up with me, and I lost my head. A spider web. Thought of all the stupid things I'd said. Spider web and I'm caught in the middle, so I turned it around and thought of all the stupid things I'd done. And I never meant to cause you trouble. And I never meant to do you wrong. Well, if I ever caused you trouble, oh no, I never meant to do you harm. Oh no, I see a spider web and it's me in the middle, so I twist and turn, but here am I in my little bubble, singing out, I never meant to cause you trouble.
Alright guys, sorry a little bit late today. We had a lot going on at work. Surprisingly volatile day, given where I left you guys last night before the stream ended. Things were relatively calm after Carney, and then things deteriorated again in the US session, and we opened the Asian session today at 130 on the pound, and then it collapsed. Right, it collapsed below, and in that low liquidity, it went all the way to 128. It has recovered since to 130. Does look a little bit weak again though, as we come into the start of Europe. So far the trading is risk off in the equities as well, so it could be another down day. It's shaping up like that. I think you can be a little bit patient though in terms of waiting for levels, but that was a fairly decent bounce that we got in the pound anyway, right? So it's sort of showing you that the 130 level is now the key resistance, just short term, and it is likely that you are going to get another retest. Maybe if we get back towards that 128 level, it could be worth a little punt. But the one trade we're talking about yesterday, buying off 130, that worked out for about 50 points, 60 points, so it wasn't really that a good risk reward. So this time I'm really going to be hesitant in even trying to suggest levels where you can buy this bad boy. That being said, if the euro breaks 110, right, you may be looking at selling some euro pound, because the euro school's got a fair bit more room to move on the downside, whereas the pound is probably going to slow down as we head towards that 125 level, and so the euro selling can play catch up. So the euro pound will be capped in that scenario. Also, any sort of rally in the pound will cause that euro pound to fall. It hit that main target area that we're looking to we've been waiting for to sell in, that 85 to 86. So far hasn't punched through again, but we'll see how it plays out in coming days. In terms of what it contributed to the sell-off yesterday, more and more negative stories, specific stories, like had some property investment funds cancel withdrawals, basically freeze redemptions. You had oil roll over again and be fairly negative. Now the oil is getting quite close to this 46 level, and if it breaks that and everything takes that next leg lower, that could accelerate some of the selling. with the oil under pressure and stock markets taking that next leg lower, and obviously just US dollar being strong, it kind of flipped the technicals on the Australian dollar. So Australian dollar is looking pretty decent, and you know we did have that sort of that sort of reversal after the RBA that looked a bit sick, right? It was like, oh fuck, you know, just generally that's not a great candle, but you know, buying towards 74.60 was pretty much the play that day, and we but looks like this is now actually turning into a bit more negative. So this trade I didn't work out at all, and anyone who's long should definitely get neutral. Um, Look, I'm not sold on the short yet. This is more just related to the stock market rather than anything specific to do with the the Aussie dollar. But it's you can't fight a sentiment change. And if stocks and oil want to fall, then Aussie's going to be dragged down with it, probably grudgingly. And I say that because Aussie's actually rallying against the Canadian dollar and is rallying against the New Zealand dollar, quite sharply against New Zealand dollar today. There's interesting price dynamic. This is actually the sort of action that you see as when the Aussie Kiwi starts to a bigger move. So this is I'm a little bit excited about this. You know, what's important now is that we do break above and hold above 105 and close above there. That would be great for this sort of setup that we've seen. Because remember, we did have the opening after the hung election. We did have the market open underneath the previous range, and now we've popped back up. The shorts are starting to get squeezed a little, and it could really turn into a much bigger move. So how's this playing out on the majors? It means that the Aussie's falling, but the Kiwi's falling further, and that makes a lot of sense in this risk-off move. The Kiwi's been a lot stronger, and the Kiwi, if it breaks trend, uptrend, then you've got some serious downside. 68 is definitely possible. So yeah, low 68s is definitely possible on a break of 70. But it's still holding its uptrend, right? So it still hasn't even flipped yet. So it's like the last holdout against the might of the US dollar. And anyone who's traded Kiwi knows that when it turns relentlessly. Like it just fall 2 cents in 24 hours. So this is still very gentle for the Kiwi. Let's see if we can see. Yeah, something like this, right? Bang, 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 bang. Jeez, remember that day. Remember that month. I think a few signals blew up in that month. So yeah, it's not there yet, but it's definitely starting to be a little bit weaker than the Aussie. So that Aussie Kiwi buying is actually adding to the Kiwi weakness, and that when you see Aussie Kiwi rally is one of the situations where you do want to be looking to sell the Kiwi against the US dollar rather than they say selling Canadian dollar or selling Aussie dollar. So it's like a bellwether, you know, for the Aussie and the Kiwi to see which one is misbehaving. Dollar yen was in action today, continue to be in action here, slipping back underneath that 105.50. Quickly we move back to the lower levels. This next 50 pips is a lot harder though, a lot harder. This is where it should slow down. A clean break of 100 would really surprise me, and I don't think you're going to get that very easily. But I could be wrong here. I mean, I've probably been caught a little wrong-footed here about the amount of potential negativity coming back in. I was like everyone, I was surprised by the big rally we had last week. But now that we've turned, I'm really not adapting to the risk off as quickly as potentially should. So you've got to be really nimble, especially in a fluid situation like the Brexit, that you potentially we can go into a very negative situation, right? You've got to be really open to that potential, especially if there's more specific negative news about UK property or just companies in trouble, something which the market can latch onto and the fear can go through the roof. Then you've got that heavy selling. But yeah, I mean, this is pretty heavy selling as well. The pound yen fell 5 or 6 big figures. In the last 48 hours. and it's still got a lot of room to move as well. I was looking back to see where the pound yen came. We're not even back to these pre-BOJ levels, so it's still got a fair bit. So still another 1,000 pips. So yeah, I'm looking to sell. I'm looking to sell pound on rallies. I'm looking to sort of stay away from the Aussie. Try not to get too sucked into that play. I'm open to both directions for the stock markets, but it looks like the bears are definitely in control right now. But it's now back to the levels that I'm very interested in buying, buying in size type trades. So a euro. Look, I'm not convinced, but I can be convinced to sell. But yeah, just play it clean. If they really want to pump the pound, just look to sell the pound. And they're giving every indication that that's the case right now. Let's check the market. Yeah, gold's going ballistic, right? Just surging. So 1,400. I mean, the first target for many analysts and banks was 1375. Halfway there. But that 1,400 is just going to be a magnet as well. So there's not enough data in this history here. You're saying there's a problem with the mic, you can't hear me? Or you can? Or you want a beating? What is it? Alright, excellent. Oh god. What is it? Good. Let me get some. Fine. Could be the way the mic was actually facing. Perhaps it's not omnidirectional. Alright, does that sound a little bit better? Yeah, so I'm a late convert to the sell-off, and I'm not that sure it's going to continue, but I'm very open to the idea now, and I'm pretty surprised by this selling. But the pound moving below 130, that's fine. See, the FTSE hasn't really gone off either, so the FTSE is still holding a fair bit of its gains. So this is it could be a fugazi, right? It could be just an illusion. The risk, there's not really any specific story out there that's implicating the rest of the world's going to slow down. And we definitely have a lot of extra stimulus coming from all the central banks. So I'm still gonna, I'm grudgingly becoming open to the downside, but I really do think that the real direction was set by the FTSE last week, and that this is just a little bit of a second wave of pound yen selling, and a lot of the market is correlated. So when dollar yen falls, the Japanese falls, the Nikkei falls, and then that can lead into a little bit of risk off, and that can sort of like force some movement down, but it's not like there's anything to back it up. It's not like the Chinese story, and it's not like the Deutsche Bank story. All right, but or the Volkswagen story, which we've got the 1,500 point move in the DAX last year. I think oil will make or break actually the whole game. If oil was to punch lower, get down to the low 44s, then you're probably seeing everything go back to those previous levels that they did test. So 92, and then below that 86. Okay, but that'd still be pretty decent, because you expect the Fed to go very dovish in any sort of risk off. Expect the ECB to be ultra dovish as well next meeting. So you've got that sort of backup. If things get worse than, on a structural level, if there's issues with funding and issues with solvency and stuff, then okay, we can talk about that, but that's not the case just yet. So dollar CAD's getting, its broken trend. It may be the favored way here. If oil is to break low, where are we going to put you? If oil breaks at 44, then with the risk off mood, dollar CAD also moves. So this could be good for 300 or 400 points higher. So if you're looking for a trade to come through here, it's like, watch what happens with oil, watch what happens with the stock market, watch what happens with the pound if it just rolls over. If dollar yen's just tagging along at the 100 level, then this is just going to get destroyed. It'll be a really sharp move too. So higher. I'm talking higher, guys. Destroyed sort of implies it's going lower, but I mean higher. CAD yen is decent. DPA GEOC. But you got the dollar yen near 100, and you don't want to be caught reversal there. So perhaps just straight dollar CAD might be cleaner. And if you want less risk than even dollar CAD, then you can go to something like the Aussie CAD, because it's got more opportunity to rally. Haven't traded Aussie CAD for a while, actually. I don't have to bring up the chart. Let's have a little look at the research, see what the boys are saying about this turn. Yeah, I was speaking. I just speaking to myself. Jesus. Yeah, no, I turned off the mic as well as the camera by mistake. Yeah, so I was just talking about what they were talking about the research, especially that Deutsche Bank one. That's very important actually. If we lose that AAA rating, it's just game over. Also, the in terms of the services ISM tonight from the US, that's pretty important. And the ADP usually is tonight, but because of the July 4th holiday, it's not till Thursday. And the ADP employment reports that little preview that we get before the NFP that can sort of set expectations for the NFP. So while the correlations between the two are not really strong, it's not about that. It's about setting the market's expectations, which change how the market then reacts to good or bad numbers out of the NFP. If that makes sense. No doubt we'll talk much more about it on Thursday when it does come out, or Friday before the NFP numbers. Yeah, look, I bought a little bit. I'm very interested to buy the Trade Wizard on the DAX. Obviously, yesterday was pretty negative, right? But yeah, I don't know. Not too keen to go ultra aggressive just yet. If we see some strength, then hop in. Otherwise, just play it in and out. It's moving, so you can make money from it. Just you got to be quick and ruthless, yeah. So the that little rally that we had at the start, that was an easy sell. Easy sell. On the DAX, so let's bring that up. So sort of this little bounce that we had this morning, that was where you sold, especially as it got a little bit of confirmation. And then you got that big candle, it's like let it run. Once you say you sold here, right, and then you see this candle come through, don't even think about taking profit. Yeah, because it's got so much more downside room there to continue. But yeah, I don't know where I ended up taking out. I think I closed out my short. So I was selling up here. I think I closed it down here. So I'm happy to go both ways while the market's moving, but I wasn't net short, right? I was just neutral as it was falling. But it won't surprise me at all if we bounce back towards 95 today at some point. If we slip below 92, we were talking about the numbers earlier. A slip below 92 would be very bearish and open up all the way to 86. So if you're going to trade large, just keep that in mind. But I'm rarely going above $5 a pip on the DAX at the moment. It's moving too quick. So I'm just keeping it at around 5. Back when things settle down, right, you can go back to your normal trade sizes. Yeah, so yeah, to answer your view, trader, is that I'm longer term bullish, short term cautious. Just happy to trade it as the market gives the opportunities. All right. If there's not any questions, I might have a little early one today because it's had a big night last night with some trader friends. So I'm gonna take it a little easy. I'm not going to get an early night's sleep. I'm not going to do too much trading. I might just stay up a little bit to watch the US Open, but that's about it. Unless there's any other questions. Alright, boys. I'll be back tomorrow. PM me if you want me to look into any specific charts. You know, we're going to be gearing up more towards the NFP, right, and going through expectations on that and positioning on that and how important it is, right? Because it's, I mean, it's always important, but it's really important this week. Oh, we can put some of the trades from the trade room in. Let's quickly do that. Yeah, the views on pound is selling, PJ. Selling rallies, mate. Selling now. FX Magician, dollar CAD long. Yeah, not too bad. Stop loss 129. Madame and long Kiwi. No, we're not doing that. I mean, look, it has held trend, right? It's held trend. We talked about it earlier. It's holding trend, right? It might be a good buy, but come on, don't make me do it. All right, I have to do it. You place a trade. I'll probably end up putting it in. One of you two will be right. Naturally hedged. Wings long. Wings been trading well. I'm not going to doubt him. It's not the trade I would pick today, but it's out there. So let's have a little look. He's entering at 110. Oh, Jesus. Let's enter it just a little bit above that. Let's just see how that goes. And pound Aussie short a little bit too long ago, I think, on that one. And dollar CAD short were already long. Alright, guys. We'll see how those trades go tomorrow.